So, how do you know if you qualify for the Augusta Rule, or at least our approach to it? We're a little more conservative because we want you to win. We've got some guidelines we need you to qualify for, so we have a small list of qualifications. We're only going to ask you once. On our application, it's going to take you about 30 seconds to answer yes or no to each of the boxes. We hope you can answer yes to all of them. The reason we have these guidelines is to make it much more likely that in the unfortunate event of an audit, that you win. That's why we ask these questions. Won't take you long to answer them, but I want to explain what it is we want from you. The first thing is we need to have a business over which you have either control by ownership or managerial control. You need to be the decision maker, right? If we're not dealing with the decision maker, it's probably not going to be a good fit. That's the person we need to be dealing with. We need certain types of entities. We need your business under tax law to be a separate person from you. Not all businesses are considered to be separate from you. So we're looking for an S corporation or an LLC taxed as an S corporation. We're looking for a C corporation or an LLC taxed as a C corporation. We could go with a partnership, a general partnership, which we almost never see. We could go with a limited partnership or a limited liability partnership. But in all those examples, all the examples that were not corporate, so the S corp or C corp, you can own 100% of, and that'll work. But when it comes to the partnership, first of all, we need to have a member who is not your spouse. Your spouse can be a member. It's just we're a little bit conservative in our approach. It's not clear if the IRS would treat an LLC or a partnership owned by two spouses as a separate person. And for the business to rent to you, we need for the business to be a separate person. So we're being a bit conservative about how we approach it because we want you to win. So we need a C corp or an S corp or an LLC taxed as either. Or we need a partnership, LLC, limited partnership that has a partner that is not your spouse. So your spouse can be a partner. We just need another one who's not your spouse. We need a real business. If you have a hobby, the classic that's litigated all the time is a horse farm. Horse farms are almost always viewed by the IRS as a hobby and not a real business. Same thing, I've seen this with people who collect cars. Now, I have seen people who have car collections and manage to convert it into a real actual business that honest to God attempts to make money and periodically succeeds. I've also seen people with car collections that try to make it a business so they can write things off. But when you look at it, it's not really a business. It was never designed to make money. It's never going to make money. It's a hobby with an LLC wrapped around it. We don't want that. We want an actual bona fide real life business. And I think you know in your heart of hearts whether or not you have a real business, but we need to see that. Next, we need the rental to be real. In other words, this can't just be on paper. I've been in audits where a business paid a person for a rental that turned out just to be on paper. Now, not only did the client lose because the rental wasn't real, there was not actual activity, nobody showed up at the house and did things. It also enraged the IRS agent. They said, well, I wonder if you're just willing to kind of not cheat, but play the game and just do this on paper, what else should we be looking for? And the audit consequently metastasized. We don't want that. We need for there to be actual rental activity. What are some examples of rental activity that's acceptable? The classic, your annual business meetings. Because in addition to being a tax lawyer, I do a lot with asset protection. One of my problems with clients' entities, in particular their LLCs and corporations, they don't follow the necessary formalities to make the entity truly viable. They think they have asset protection, and they don't. One of the things that needs to be done every year is to have a legitimate, bona fide meeting. Now, what's an annual meeting for a company? It's not that complicated. You talk business, usually from a strategic level. You go through the plans for the business for the next year. What's happening in the market? In fact, here's what normally happens. You have friends that are in your business, and you chit-chat with them informally. I just want to make it a little more formal. Invite them over, record the meeting, have something to eat, take some notes. That's one example. Employee training, meeting with customers under certain circumstances that we'll discuss in detail. These are examples of real rental activities, not something that's just on paper. Next, we need to keep it legit. Part of keeping it legit is you're really only going to do this for 14 days or fewer during the year. Now, we hope you max it out and use all 14 days, but certainly you can't go over that number. Now, should you go over 14 days, what happens? All the days are now taxable income to you. So there's no tax break. Your business gets a write-off for paying you for rental, but you have to declare all the rental income, all 15 days, let's say if you did 15 days. So you really want to stick to 14 days. Going over by one spoils everything. Next, if you're taking the home office deduction on your tax return, typically on your 1040, so you've got a business and you're taking the home office deduction for any business, we need you to exclude the office from the rental. And we make it easy for you. We have contracts pre-done that automatically exclude the home office. We have some recommendations on how to document that the home office was not included. Why do we do this, by the way? There's a rule that the home office has to be exclusively used as an office. There's an actual case where someone's mother-in-law slept in the office one night of the year, and the home office deduction was completely disallowed. Why? Because it was not used exclusively for business. There was a tiny bit of personal use, and that spoiled everything. So we need to have, if you have a home office, if you're taking the deduction, it needs to be excluded, and we make that easy for you. But we do ask you in our questionnaire, do you have a home office, so we can help you handle the implications? And of course, what we're going to ask you to do is follow all, yes, all of our guidelines. Otherwise, it may void the guarantee, because we do promise that if there's an audit, we will represent. Now, I can't promise we'll win. That's too random. The IRS, life, too random. If you follow our guidelines, odds are you're going to win. In fact, we want audits. We want the IRS to know eventually, when they see our application, they're just going to give up and not fight. And there are applications out there. There is software out there, for example, for salaries, for depreciation. And when the IRS sees this application, that part of the audit's pretty much over. That's the standard we want. Now, we don't want you to get audited. We're not going to do anything to cause you to get audited, but we do want to win if you get audited. And for you to win, we need you to follow all of our guidelines, every one of them. If you do so in an honest and ethical manner, then we will guarantee to represent you in the audit. If you follow all of our guidelines and we represent, you're not paying for us to represent you on this topic. We're not going to run the whole audit, right? If you're getting audited on 3 issues and this is one of them, we will represent you on this issue free of charge in the audit, in tax court, up to but not including the trial. But for that to happen, we really need you to follow our guidelines, all of them, ethically and honestly.